Hello and welcome here again to our financial accounting review help sessions. This is going to be our second review of journal entries and T accounts. As you see on the screen, we have some examples to go through, and I'll be going back and forth to show how we got the journal entry and update the T accounts. And then at the end of this video, we're going to look at how to prepare the next step in the accounting process. So the first two steps are the journal entries and the T accounts. Those are about 90% of all accounting work. You've got to know those. And then the next step, as we'll see when we finish up this example, we're going to look at the trial balance. So let's go ahead and jump right in here. I'm going to kind of go through these three at a time. I'll show the journal entries after each one, but for the T accounts, I updated them three at a time. I think it'll help it. Since we've already had one example where we did one at a time, I think we're at the point where we can do three now. So with this first example, the owner, that's Marty, we have our painting shop, and he invested $30,000 into his business. So remember the two questions we always ask, back to our previous lecture and our previous example. Remember the two questions. The debit question is, what did the business get? And the credit question is, how did the business get it? Or why did the business get it? So with this question here, the debit, what we want to find out is, what did the business get? And if we see this, it seems like it should be pretty obvious that the business got money. And in accounting terms, what we call money is cash. So my first journal entry is going to be a debit to cash. And then it says the owner invested the money into the business. So where did the business get the money? They got it from the owner. And remember, we call that capital, or it can also be called common stock if you're looking at it from a corporation point of view. I'm going to use the term capital here, but in the T accounts I put both of them just so that it's clear. I'll show the T accounts again in just a few minutes when we have the first three up. Okay, so the first question was, what did the business get? We got money, otherwise known as cash. And how did I get it, or where did I get it from? The owner, and we call that capital under the owner's equity category. Okay, so the second one now, Marty purchased a large piece of equipment on a note from Munger for $40,000. So we asked the question, what did the business get? Well, we got a large piece of equipment. Remember, that falls under the assets. That was our debit question. And the credit question is, how did I get it? How did the business get the equipment? And the first thing people like to think of is, well, I paid cash. But that's not what the transaction says. The transaction shows that we bought it on a note. Now, a note is a long-term liability, most likely. Notes usually involve interest. Usually there's some papers to sign. They're usually more in depth because the dollar amount is larger. And that's the case here too as well. $40,000 is a good chunk. And so we're going to call this exactly what it is, a note payable. And then I always like to put dash in whoever it's to. This helps me keep my books nice and organized, so whenever I look back to my T accounts, I can see exactly whom I know and who I owe money to, in this case, the Munger company. Now the third one, before we look at the T accounts, we bought painting equipment, and we're going to consider this some larger type of equipment. So therefore, we will put it as an equipment in the assets. And we bought it on credit from Paints R Us for $1,000. So we ask ourselves, what did the business get? We got equipment. So just like here, we got another piece of equipment. Now, I do want to note that this is different equipment, obviously, and I want to show that it's different. I want to make sure I separate each type of equipment out, and that's going to come in handy later on in the semester when we look at different depreciations. And some equipment depreciate longer than others, so we've got to have each of these separate at some place, and it's best to go ahead and just do it right here. And I have my equipment number 2 as my debit. And then the credit question is, well, how did I get it? And this one, it was a much lower dollar amount, and I'm probably going to be be able to pay it off within a year, probably in a few months. And so this is a typical account payable. And this went to the Paints R Us company. And that's how I got the equipment, the credit question. How did I get it? I bought it on account. Now let's look at the general ledger here for the first examples. So our first one was a debit to my cash and a credit to my capital. And I'm going to also show that this is common stock. I've done this on the future slides that we'll see, but not. So we had cash and a credit to my common stocks, or $30,000. The second transaction was further down here. Remember, equipment falls at the bottom of the assets. And I showed that I bought that on a note. So on my T account, I'm going to go into the bottom part of the liabilities, show that $40,000 that I owe, and show that I got a piece of equipment. And then the third entry, remember I bought the second piece of equipment. And so I usually don't have a lot of room for assets, so I went ahead and put this and drew a little line here to show this is the cutoff for liabilities. The rest of these are assets. So I've got my equipment here as number 3, my number 3 transaction, and here was the credit for my number 3 transaction. Now at any point, and it's good to do this at several steps along the way, it's good to go ahead and let's go ahead and do a summary of our accounting equation. If I would add up all of my assets, so $30,000 in the cash plus my equipment number 2, I would have $71,000 in total assets. And then when I add up my liabilities, I have the $1,000 here plus the $40,000 from the note payable. And then simply here the common stock, that's all we had. And if I add up the 41 plus the 30, that does equal my assets of $71,000. So at least I'm on the right track. I may not be perfect. I may have switched some accounts around, but I've at least got the transaction to balance, which is a good first step. Okay, let's look at the next 3, numbers 4, 5, and 6 here. Okay, the first week we earned $3,500 in cash for doing our job. Remember, our job is the paint store, or actually doing paint work. And we earned $3,500 cash, and then we also earned $750 from Jim, but he'll pay us later. And we did a job for Mike, and he will also pay us in the near future for $300. So the business is actually getting 3 things. We're getting cash, a promise to be paid from Jim, and a promise to be paid from Mike. And I want to show each of those in my journal as separate. So when I pull up my journal entry, I've got my 3 debits here listed, what I got, what the business got, cash, and then 2 promises to pay. And then I ask myself the credit question, why did the business get cash? And why did they get a promise to be paid? All of those came from us doing our service, doing our job, which is our credit to service revenue. So here's our, we're going to move on here to number 5 and then look at 6, and then we'll show how the T accounts are updated. Again, you should be updating your T accounts every single time as we go along, so if you need to, pause the video. I'm just doing this for ease purposes, so I don't have to switch back and forth so much. But you should be doing that every single time. Don't wait like I'm doing here and do it every 3rd time, because you could easily get mixed up. Paid for a magazine advertisement that ran this month for $200. Okay, we think about, what did I get? I got the use of somebody doing a service for me. Somebody did a service for the business. They provided advertising. And so then I need to ask myself 2 questions, the expense questions. Am I getting the use of this advertising right now? Yep, it ran this month. And is this advertising going to last me less than a year? Well, definitely, it's only going to last me this month usually as well. So that would be my debit, would be advertising expense. And then the credit is, well, what did the business do to get advertising? Key word here is I paid for it. I paid for it. So that is my debit and my credit for number 5. What I got, advertising, and it's an expense, and so I want to always list that it's an expense. Don't just put advertising. And then how did I get it? Through cash. I paid money. So go ahead and update your T accounts. Pause if you need to. But number 6 here, we paid $500 on our note to Munger. Now remember I said notes usually involve interest, and this one's no different. Of the $500 that we paid, $100 was attributed to interest. So I paid $500, but like if you have a car loan or a mortgage or student loans, not all of your payment goes to the reduction of your bill. So most of it went to the reduction of my bill, $400 worth. But that extra $100 did go to interest. And interest is just like kind of advertising. Somebody has provided me a service. Therefore, I have to pay them interest. The service that they provided was loaning me money. So when I have interest, that is treated just like advertising. It's an expense. A service has been provided to the business in the form of loaning money. And this is me paying back that thank you for loaning me money. So my debit here, I actually got 2 debits. The business got 2 things. They got, 1, a reduction of their debt by $400. And then the second thing that they got was the ability to loan to get money. And so therefore they have to pay a $100 fee for that, $100 of interest. So that's my 2 debits. A reduction on my debt, and then the ability to get money loaned to me, so I have to pay interest. That's an expense for this month. And then why did I get a reduction on my debt? And how did I do the interest? I paid money, cash. Now we can look at my updated T accounts and see if your T accounts match what I have. So I've highlighted these in the order that we've looked at. Number 4, if we remember back to number 4, we got money for doing a job. And we also, along with getting the money, we got 2 promises to be paid, one from Jim and one from Mike. So Jim owes me $750, Mike $300, plus the cash that I got of $3,500. I got all of that by performing the revenue, my job in the business, $45.50. If you add up all 3 debits, it is $45.50. The second one that we did in this series was advertising. I got the use of advertising because I paid money. So I'm going to debit my advertising expense. It should make sense that advertising expense went up. Remember the expenses are plus minus. And that my cash went down to $200. Also note, remember that this plus is actually a negative to the equation. So just because this was a plus, when I'm doing the equation, it's going to take away money from this side of the equation over here. Just as cash took away from my assets. So they will balance still. The last entry I did in this set was the payment on a note. So here was my $500 payment showing a reduction of my cash. $400 coming off of my note to Munger, so I now owe Munger a little less money. And then finally, my interest, showing that of the $500, $100 of it was money that I'm not going to get back. It was payment for getting a loan. I had to give somebody some extra money, and not just the repayment of the loan. Okay, I can also at this point go ahead and update my accounting equation. So when I add up my cash My cash, I just have the 2 debits here, and then minus my 2 credits. So 33,500 minus the 700 here gives me the 32,800. And then I add up all the rest of my assets. That's what I come up with. Do the same for all of these guys. And since now this is not as easy to do in your head, what I like to do down at the bottom of my T-account sheet is to prove, let's add up the equation. Liabilities plus owner's equity plus my revenue total gives me this, minus my expenses is 74,850, which does equal what my assets did, 74,850. So I'm at least on the right track. Okay, my third set of 3. This number 7 here, received payment from Jim. Remember, Jim owes me money from a prior service that I gave him for the painting, and he pays me the $250. So I asked the question, what did the business get? We got cash, $250. Why did I get the cash, or how did I get it? Well, I got it from Jim, and it was a payment off of Jim's account, what he owes. So my cash is going to go up by $250 as an asset, and my account receivable is going to go down also as an asset, so the equation will still balance. So my journal, my debit to cash, and my credit to the Jim's account receivable. Number 8 here, we paid our bill from Paints R Us for $400. Okay, so we ask, what did I get? When I pay a bill, I get a reduction of my debt, just like when I had the Munger note payment. In this case, none of it really goes to interest because I'm going to pay it off very soon. So when I get a reduction of my bill, that's a good thing. So I'm going to debit my account payable. And the reason I got a reduction on my bill was because I paid money. My cash went down by $400. Again, you may want to pause this after every transaction so you have time to go and update your T accounts. Number 9, generated $2,500 in sales. In addition, Joe will pay me later for an additional service that I did. So we had cash sales and we had a promise to be paid on top of that. So I need to ask, what did I get? The business got 2 things. We got money and a promise to be paid from Marty, or from Joe. So let's go ahead and show that I got money and a promise to be paid. And then the credit question, why did I get the money? Or why is Joe going to pay me? It's because I did a service for them. I did my job. A service revenue of $2,950. Okay, let's go look at the journal entries for these 3 transactions here. The first one was cash paid to us from Jim. Okay, so here's that cash coming in on number 7, in addition to my cash. And then I take it away from Jim's account. And so when we do just the simple math here, Jim only owes me $500 now. He did owe me $750, but he paid $250 on his account. The second one, I made a payment. So before, with Jim, I got money. This time I'm paying money. I got a reduction of my debt from Paints R Us. I did owe $1,000. Now I owe $400 less. So this is my total, of course. And I need to subtract out the cash, the $400 from my cash T account. The last one was I did my job again. And most of the people paid me in cash, so my cash is going to go up. That's a good thing. The other item was Joe is going to pay me later $450. So those were my two debits, if you recall. And my credit to offset everything, and also answer the question, how or why did I get money and a promise to be paid? Because I did my job. My revenue is going to be increased. Again, you can go through and update my accounting equation, make sure everything balances. So I got a new cash balance. And then when I look at the 77.4 for assets, I want to see if the other side does equal 77.4. So when I add up the first three items on the right side of the equation, subtract out my expenses, they do balance at $77,400. Now we only have two transactions left, and then we're going to look at the trial balance and kind of see what that really means. As it's kind of like our third step in the accounting process, and you'll see that there are officially 8 if we count the bare bones trial balance as one of them. Okay, number 10 here. We paid our assistants $1,200 for the last 2 weeks of work, maybe. Okay, so if I pay this is kind of a harder one to think of. You ask yourself, what did the business get? Well, we got the benefit of my employee working for me. So whenever the business gets something, a benefit like advertising, like interest, getting money loaned to us, we have to first think automatically this is probably an expense. And it is. This is an expense. Somebody did a benefit for me. It's only lasting right now. So my debit here is my wages expense. And then the easy question here is, why do my workers work for me? And I need to look to see if I actually did pay. And yes, I did. I did pay them. I'm not going to pay them later. I'm paying them right now. So my credit is to cash for the $1,200. Go ahead and pause and update your T accounts. The last entry is I pay myself $400. Now, when an owner pays themselves in a sole proprietorship or a partnership, you have to take it out of the drawings account. You don't really call it a wage expense. So a drawing or a dividend is just the opposite of our capital or common stock account. And as we'll see when I bring up the T accounts, the drawing is our first contra account that we mentioned in this class. And remember back, a contra account is an account that is opposite of its parent. So a drawing falls under the owner's equity, just like capital. But instead of with the owner's equity, it's a minus plus. It's a minus for a debit and a plus for a credit. With a drawing, it's the opposite. It's a contra. So therefore, the debit is a plus in this case, and the credit is a minus. How did I go about giving the owner money as a drawing? We paid cash out of the business. And so my final two items, remember I had the wage expense for my employee, falls over here in my expense category, $1,200. And I had a credit to my cash for that $1,200. And then here's my drawing. This is a contra account. Sometimes I like to put these in a different color to help me remember that it's a contra. So when my dividends go up, what it does, if I look at my owner's equity total here, $30,000, but less the debit or the dividend here, because it's opposite. So that's how I come up with the $29,600 for owner's equity total. Okay, when you're all done with the transactions that you're given, there's 2 things you need to do to finish up your T accounts. The first thing you need to always do is go ahead and total your T accounts. And if there's more than one, I like to put it at the very bottom and either draw a line if I'm doing it on paper, like a bold line here, or somehow bold it. So that tells me that there wasn't an additional transaction of $33,550 in cash. If I have it bolded or I have a line right above it, that tells me that a total is coming next. So here was my total for accounts payable, for example. or my total for my service revenue. Once I total all of my T accounts, the second step that I need to do is to go through and see if my equation does balance. And that's what we've been doing all along. So it's good to do that all along. So if it doesn't balance at this point, I know I only did something wrong in the last two items if I've done everything else and it's balanced. That makes it a little easier to go back and check your work. So let's check my, my adding. I had these three items added up for the right-hand side of the equation, minus my expenses, gives me 75.8, and that was exactly what my assets were. So those are always the two things that I want to see when you're all finished with your T accounts. The final thing, the new thing that we're going to look at is the trial balance. The trial balance is very simple. You've already done all the work. The trial balance simply is around for two reasons. The first one is the trial balance helps declutter all of your T accounts. You may have a whole bunch of numbers here and there, maybe some erasing and some scratching out. But what this does is for anybody that wants to see a quick look at all of your accounts and where you're at standing balance-wise, the trial balance is the place to go. Trial balances are very important to a lot of companies. And what it is it's just a summary listed going down, and they go down in proper order, in your accounting equation order. Therefore, assets are always first, in order of liquidity, like we have our T accounts arranged. And then we have our liabilities, and then all the way through to the expenses. And we put our final T account totals wherever they fall. Is it a debit balance or a credit balance? And then the second reason we do a trial balance is to verify not only did I do the equation balance, but do my total debits and credits balance. That's how I'll know if I did a trial balance correctly. And here's my example of my finished trial balance. So let me explain a few things here. You always have a title at the beginning. The first line is always the company's name. So in this case it was Marty, I believe. And Marty's wrong name there. Trial balance, what it is. You always put the second line what you're actually providing, which is a trial balance. And then the third line here is as of. That means for this year only. So as of December, and then whatever year we're talking about. So what I did is I start with my assets. So I put their chart of account number, kind of like a classification, cash account 100, and then I put what its balance is. So if I go back to my T accounts and I look at my cash, its final balance was $33,550. And it's a debit balance. That makes sense. Your assets should always be a debit unless you have a contra account. Now I'm just going through here and listing my three account receivable items. When we get further along into financial statements, we'll go ahead and combine these. But sometimes it helps if I don't have too many clients to know who owes me what money. Now if I start having 10 clients, I may want to go ahead and combine them at this point. But with only 3, it's okay to keep them separate. And in my equipment, we do the same thing. If I have a whole bunch of pieces of equipment, I'm going to probably go ahead and combine them like I do on the balance sheet that we'll see in a couple of weeks. But here, since I only have 2, I go ahead and keep them separate. Next come my liabilities. Remember, they always have a credit balance. The same with all owner's equity accounts, except if it's a contra. Revenue also has a credit balance. And then finally, my expenses and their totals. And then the second important thing about a trial balance, when I add up all of my debits, do I get the same as when I add up all of my credits? In this case, it does balance out to be $77,700. Okay, I hope you got something out of this video with our second example. If you need more examples, feel free to always email me. and I will send you those. I'll send you separate examples with answers so you can go through those on your own and see how you did. If you're viewing this in YouTube and it helped you, please let me know. Comment or show the like button. That helps me and gives me encouragement to continue making these videos. Our next video will be over adjusting entries, and then we'll have an example and we'll have a couple Wiley Plus problems as well.